Hey, it's Rob with Homes by Rob Denny, Home Smart Realty West, coming to you from beautiful Carlsbad, California. Got a little rain this past week. It's been nice. Always like the smell. Big waves too. Let's jump in the real estate market. We're going to take a wrap up of 2020 for all San Diego County, then look over at the coastal area. And then I'm going to talk a little bit about what I think is coming in 2021 and where the market's headed. So let's jump in with all San Diego County with detached homes. New listings for all San Diego County were down 11.8%. As you know, inventory has been an issue for a few years now. And I will say this, considering when the pandemic first started and we had some months that we were down 30–40% on new listing, and you remember those months if you follow my reports, the fact that we rallied and we ended these last few months in the positive, and it only be down 11.8% on new listings, not horrible, folks. And the low inventory led to a huge drop in days on market. As you know, if you try to buy a house, you end up with a lot of bidding wars. And the record low mortgage interest rates have a lot to do with that. Days on market were down 27.8% or 26 days on the market. The median price rose 10.7% to $700,000. And again, the low inventory and interest rates has a lot to do with that big price increase. They weren't the only factor, but they definitely have a lot to do with it. And this is a fifth straight, maybe sixth straight year we've been in the positive, which is really, really impressive. It's not something you see all the time, that's for sure. Another thing I like to keep on is the original list price received, and that was at 99%, which is up 2.1%. And a lot of homes actually went over asking price. So all numbers outside of inventory, new listings, of course, were really solid throughout San Diego County on detached homes. Let's take a look now at attached homes. There were 15,917 new other attached listings, which is only down 2.9%. Days on market had another strong showing, as they were down 24.2%. That's only 25 days from listing to accepting an offer throughout San Diego County. The median price was $459,905, which was an increase of 8.2% compared to 2019. And the original list price received came in at 99%, which is up 1.2%, which is up from 2019. And again, just a lot of these homes, bidding wars, low inventory, low interest rates. So all San Diego combined, detached and attached. Again, only weak numbers, new listings and inventory. Other than that, every single number throughout San Diego County, the numbers were strong. Let's move over to a quick look at the North County coastal Oceanside 92054 down to Del Mar area. And we'll be comparing 2019 and 2020. And we will start with detached homes. And new listings were down 4.1% for the coastal area for all detached homes. And that's pretty good compared to what's been going on, like I said before. Average days on market was down 12.7%. I mean, average days on market was at 35. The median price for detached homes was up 11.9%. That is another huge jump. And the original list price received was at 97%, which is up 1%. Now let's take a look at all other attached on the coast and compare to 2019. And new listings were only down 2.3%. So they rallied too. The last quarter of the year, they really rallied. Average days on market was 32, which is down 16.9%. And the median price was up 5.4%. And the original price received was at 97.8%, which is up 1.1% from 2019. Take a quick look at a couple other numbers on this coastal area. Del Mar, no big surprise, they had the highest sales averages of the year, both detached homes and attached homes. What's interesting about that is they always have the longest days on market, and they also have the lowest original price received. In other words, they were probably priced a little high, obviously they were, and that probably led to them coming down. They had to come down some, which is why they sat on the market longer. Solana Beach, they had the biggest increase. In detached, were up 18.8%, and attached homes were up 14.4%. And that is the largest increase on the coast. And actually, Cardiff by the Sea was right behind them. Detached homes were 17.7% increase. So that's all good news. Now, I want to jump over and let's take a look at 2021. And, predicting the real estate market's a tricky thing, I'll be honest with you. But as you know, I go by the numbers, not just the MLS. I do a lot of studies. I follow the Fed. This is what I do for a living. This is my life. So I take it serious and I keep up to date on stuff. And I'm telling you right now, 2021 is going to be a strong year for real estate. And that's not because I'm a real estate agent. I'm going to tell you why right now. First of all, the inventory is an issue. But what's more important right now is the interest rates are so low, folks, that they are the lowest they've ever been. And they could even go down more. We could even see rates as low as 2% or maybe a little less. The Fed has been very clear that they are not raising their loan rates. So, and not even just this year, they're saying even all the way through 2023. Now, I don't buy into all that because how do they know? Nobody knows exactly what's going to happen. If inflation starts going crazy, they're going to start raising interest rates. But that's not going to happen this year. At least I don't think it is. So, I'm predicting interest rates are staying very low. And I think that housing prices are staying up with the low inventory, but there's a couple things to factor in that are going to make that change. First of all, once we get this vaccine out, which is out, and once we get that out and distribute it better and we get more and more people get it, and so we can get back to living a normal life, when that happens, more and more people are going to list their homes for sale. Because the bottom line is a lot of people got nervous last year about having strangers come to their house, so they did not want to move during a pandemic, which is totally understandable. So even if the vaccine, like I said, if it takes till June, I think by April, we're going to start seeing an increase in listings. If not then, I'd say by June. I mean, I don't have a perfect crystal ball, but I do believe that April, we're going to start seeing them up, and June will be even better. And I'll tell you this, right now, prices are so high because there's so many buyers out there, no inventory. So I expect prices to come back down. Now, not losing money, but I do expect them to come back to reality because there's going to be a lot more homes on the market to choose from. So not in a 10% range increase, but more than normal 2 to 4% and an increase for the year. So if you want to sell right now, if you're leaving the state or you just want to sell your house, rent for a year and wait and see what happens, you're not going to get more money than you are right now because of the inventory being so low. And that could stay this way for a few months. So, I mean, think about it. No inventory and 5 people are looking at one house. Of course, they're going to get into a bidding war. But there's 4 or 5 houses in typical neighborhoods like that one. Guess what? They're not going to be as inclined to get in these bidding wars. They're going to look at other houses. So, like I said, April, by June, a lot more houses on the market. Unless there's some crazy thing goes on with this virus and we have to stay in lockdown or this virus has issues, which I don't see happening. I think we're getting back to normal. Then I expect a lot more inventory. So I see prices coming, still staying in seller's market, but coming back a little bit to the buyer. It'll help for sure. So another thing that's going to happen, or that could happen anyway, that we'll possibly get some more sales. You know, even though locally foreclosed homes or homes on the verge of foreclosure are far down in San Diego County. I think they were at like 0.5% in November. overall, they're like 2.8 throughout the country. So we're way below that. So, but many homes in San Diego County could have easily fallen under the CARES Act, if you remember that. And what the CARES Act is people who had loans through FHA, VA, USDA, Fannie Mae, or Freddie Mac all qualified for the CARES Act, which allowed you to temporarily suspend payments if you qualified because you were suffering from financial impact from the coronavirus. Now, when these moratoriums come to an end and people get back into living their lives and they need to get back to making their mortgage payments, they could easily decide, because who knows, they may have a different job. They may be just strictly working out of their home. They may just want to cash out and leave the area. Whatever's coming, I think that that's going to lead us to, again, more inventory. And these homes, you know, people have refinanced, but people aren't refinancing 100% like they were in 2008. So people are going to have equity. So they're not going to be a bunch of homes going into foreclosure to get some smoke and deal. It's not going to happen. Because they have equity, they'll take the money and they'll start over if that's what they need to do. But they're going to have cash in their house. So I don't see banks coming in and taking a bunch of homes. But I do see, once all this gets back, that I do think more people are going to list homes and it's going to be more inventory on the market once again. And so, again, that's going to help the buyers because of low interest rates. There's so many buyers. And that's it. That's a wrap up of 2020. And that's my thoughts on 2021. And if you do need anything, you need a valuation done on your home, you have any questions, please reach out. I think we're in for a good year, folks. I'm looking forward to the fair, hopefully a good 4th of July, spending some time with friends and family at the beach, you know, our normal lives here. And there's, hopefully we'll never have another year like 2020 again. Anyway, hope to hear from you, and I will talk to you soon. Thank you.